What's happening, guys? We are back in my high-tech recording studio, aka the back porch at the beach, and using my laptop once again. I gave up on trying to figure it out, have it all perfect with different 4K video this and microphone that and all that kind of stuff. So I'm just gonna make do to make it easier. Otherwise, it turns into like a 2-hour, 3-hour kind of thing, when the reality is I could probably finish it in 20 or 30 minutes. So that said, given the fact that I am in the high-tech recording studio, you can't see my entire shirt, but I did get a special shirt for today's video. Bring in your A game, because Centrepoint Canada is finally here, and that was the big announcement that I was excited to share with you guys, and I said it was coming this week. They're going to start accepting applications as soon as midweek, but it's looking like the 18th of September. So depending on how sort of the soft open goes, there is a link in the blog post. There is a link that we'll put on the bottom of the screen, and you'll be able to sign up for early access to Canada. And so for those of you guys that are just a bit north and have always had to use different brokerages and then get screwed with some of the fees just because there's literally no competition and they can kind of charge what they want to charge, you now have another option. So I know that there's going to be a ton of traders that are excited. I know the waiting list has been around for a long time, and I know it's been 2, 3, 4, 5, 6, 10, I don't even know how many years in the making, but it's finally here. So it's really good news. Again, you get the same opportunities as everybody else has had with Centrepoint, only this time if you live in Canada. So that's the big news for today. And again, we have a link, sign up. That's the early access. So they're gonna just kind of be going in order and then opening those accounts accordingly. So as always, we'll probably pick something for everybody that opens accounts. We'll pick a couple winners here and there. I always like to do that whenever we do something like this. Centrepoint's been a long-term partner of ours, and they've just been an incredible resource for traders. They always get behind the traders, and the biggest thing about them, and the reason that I like them and I continue to trade there, I've had multiple brokerage accounts, and I only have one trading account at the moment, as well as IRAs, which I don't really count that as I guess active trading, or obviously you can't short, but those ones are at TD Ameritrade. But for me, my day-to-day day trading is only done at Centrepoint, and they're constantly one step above the competition. They're constantly one step above sort of what should be expected as a customer. Most brokerages, you're just sort of an account number. You're just sort of another person pushing buttons, and they're collecting commissions, right? But the good part about Centrepoint, for those of you guys that have come out to any of the meetups or Traders for a Cause or any of that kind of stuff, they're just good people. They're people that you want to work with, and they're not always just trying to upsell you or pitch you or tell you how great they are. They just want the best for you. They know that if there's a long-term client, if they can create a long-term client and get behind and support and be sort of that need, deliver what that need is for that client, they're gonna succeed in the long run, and they've always played the long game. That's why they continue to be the best and the innovator in the space, and they're a lot like IU in the sense that we're innovating literally every single day, and we reinvest in technology, reinvest in our members, creating more and more content, tools, and things like that. So I hope you guys see that. I know you do. There's always of course a few that will refuse to see that, but the vast majority, 99% or so, do. And so I think why I've sided and partnered with them from the beginning. So anyway, sign up, and again, if you're Canadian, the link's there. That is the early rollout, and first come first serve as far as the first batch, and then as they open it up to the rest of the public, then you can obviously join up in any time. So Let's see. Video discussion. What did I want to talk about today? Last week, pretty dialed in focus. Again, I've repeated myself a few times, but you know, my goal is to just trade less and find the best opportunities, and then really reevaluate 1130. And I did that. I also, you know, if I get over X P&L, like that's it. You know, just build that habit of getting off of desk. And that's not the right advice for, you know, maybe every trader that's trying to get it and to get to the next level and really succeed. But that is sort of the, after 20 years of doing this, advice that if you don't want to have regret in the next 10 years, that, you know, it's probably something that you should focus on. Everybody is at a different spot. Everybody's going to have different priorities. But, you know, I'm just sharing, you know, what I'm currently doing in my life and, you know, what's important to me. So you've been seeing that. I've been trying to, you know, keep up with it. It's obviously easier to say things than to actually do them. It's always easier to make a call, you know, trading than actually trade it. So, you know, really it's all about building those small habits. And, you know, I'm just trying to, you know, fill my time. Like if I'm trying to get off desk, I'm going to try to take myself away from the desk. Otherwise, I'm going to venture back to the desk, just like I was talking about recently with Anthony when he was up here. I literally have to take myself out of the situation, because if I'm still in the house, I'll still just, you know, crawl back into my office and, you know, find something to push a button on. So last week we talked about pot sector, marijuana, and a couple days before that on Twitter I had mentioned that it felt like we might be sort of joining or starting a new, almost like an AI. I compared it to AI and oil and, you know, BTC, Bitcoin, and all that good stuff that becomes like a sector or a theme type move and starts to drag the entire basket of names with it. And so my focus that I had given you guys was CGC, Tilray, TLRY, and then MSOS, which is like an ETF. There's also another leveraged ETF off of that, I believe, MSOX or something like that. But at any rate, all fantastic opportunities, all worked extremely well. CGC continues to squeeze out and continues to go, and hopefully we continue to have some upside there. Personally, I am hopeful that it flushes out and gives another opportunity to accumulate some stock, considering the fact that I've pretty much sized down and sold out too much of it. But either way, solid opportunity, solid reversal on the sector, and anybody that paid attention probably did pretty well. I've been doing a lot of longs lately. We went over the EDBL squeeze last week. We had another one of those situations this week. AREB was fantastic. AREB was just sort of a sympathy trade based off of some stuff that went down with Liberty, which was another safe company. And so obviously AREB becomes the kind of the sympathy trade. Well, you know, if they're bad, then you can at least, you know, go long this trade and have an opportunity with these guys, because they're going to benefit from it, right? That was the kind of thesis, is that AREB would benefit from, you know, this whole Liberty issue with them giving passwords or passcodes away to be able to get into a safe. So anyway, that was a nice little ramp. I had bought pre-market relatively early. I just got a good position on there. I like the risk, 5-10 cents versus the potential of a squeeze. The line being 130s, and as you guys saw, after it went to 130, it just took off. So it was nice. It was about an hour later or so, and just right off the open, straight up into you know, a pretty wild squeeze. So that was great. And then I flipped short and unfortunately covered too soon. But regardless, pretty good opportunity. So hopefully we continue to have more of those. I've been very open to getting long more. I like getting long. It just seems like they jump up that much faster. So hopefully we continue to have those opportunities as well. Then we've got one note that I had on here. Hold on, Beckett. next note that I had on here was interviews. We have a bunch of interviews coming that we filmed 2 weeks ago or so when some of the Clovers were in town. Me and Anthony did one. We've done a few different things. So those are going to be coming on the channel. But if you guys wouldn't mind, leave a tweet, leave a takeaway of people that you would like to see interviewed on the channel, or people that you like that you'd like to see, again. And as most of you know, my goal is just to put good information from you. We don't do crazy sales pitches and things like that, just like you see in Sunday video. It's just good content. Hopefully it checks a box for you, and hopefully it makes you a better trader. If it doesn't, you wouldn't be watching, and that's that. Same thing with the interviews. Hopefully you take one thing away from each trader. And as I've said before, I said it on the last video or a couple videos ago, there's no competition amongst different services. You need to go wherever you find value. And whether or not I agree if one service is better than another, it doesn't matter. It's what works for you and what you actually get value out of. So just remember that, and make sure that you find your home and what makes sense for you. And my goal with these interviews is potentially find you that next person that you could benefit from. So it's not always going to be IU people. Sometimes it's other swing traders. Sometimes it's options traders. Sometimes it's people that have other services. But whatever the case may be, the goal is to at least have one key takeaway from each of those interviews. And I think as long as you go in with that mentality, I think you can start to expand your playbook and become a better trader. I wanted to go over, and I will, a couple channels that we had last week that we talked about ahead of time in IU, and sort of just the mentality, the thought process, and keeping yourself out of some of the crowded spaces. So I'll get into that next, and then just as far as the crowd and patience types trades. And I feel like that was a very big piece of last week. Stuff like Verb, VERB, where it had that secondary squeeze out. Stuff like THTX, seeing it's continually trending higher, but what makes that a good trade? And then things like BIOC, which the sooner that you can identify the channel that it's stuck in, the better and faster that you can react. So I think when you see this and go through those, I think it's going to help you throughout the day, just because everybody does the same thing. And when there's only a few names that are working, or a few names that are trending on a particular morning, that's when everybody's going to be super focused on them. And everybody is afraid to miss that first entry and that unwind. But the reality is it's just an emotional roller coaster, back and forth, who's on the wrong side, who's on the right side, who's on the wrong side, who's on the right side, until that exhausts everybody out, both sides, and then reality hits. And whether that means it's going on to the next level and breaks out, or it breaks down, at least you can see that by not being exhausted, by not getting chopped up, and wait for that, and then join that opportunity. And that was similar to something like BIOC, and most especially Verb on Friday. So let's get right into scan for the week ahead, and we'll take a look at a few things. Again, most of this stuff, most of the things that I'm trading, there has been some from scan the night before, but the majority of it off the open is stuff from pre-market that I'm finding on market, scans pre-market. And then later on in the day, maybe something 10, 11, noon plus, are things from scan. So reactive trades off the open, for the most part, there hasn't really been any A+ type setups. It's more letting the kind of tide turn and then starting to join into those moves. And then otherwise just waiting for opportunities that I'm prepared for, price alerts to hit, setups to form, and all that good stuff. So, all right, let's get into it. All right, guys, so for the second part of scan, as always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're good with that and you want to learn how to sort of take some concepts and apply it to your own trading and potentially become better, then you're in the right spot. If you want to be told what to buy or sell, then you're in the wrong spot. Turn the video off. This is not for you. All right, so verb. You know, these are a couple topics I wanted to go over before we get into scan for the week ahead. But a verb is very similar to something like ICCT, where you know everybody's trying to do the same thing. You know everybody wants the same thing. It's the most obvious trade, right? And so it had a nice run, it faded back, and then it reverses. And, you know, it's just going to squeeze out the last couple people and then fade back. We all knew that. But sometimes people start to get a little bit aggressive and put their bias in front of what's actually happening, right? So in this case, you know, verb had that morning kind of move at 8 a.m. and then starts to kind of fade all the way down into basically open right at 9:30 was pretty much the lowest point of the morning after it had rocketed up. So if you're going into open and you feel pretty good because it's had that nice steady walk down, you don't know how it's going to react on a swipe test. And that's the importance of a swipe test, letting it actually prove and show that, yeah, you know what, you are right. It was selling off. It was heavy. There are sellers in the tape. But the reality is we don't know if those are sellers or if it was just shorts walking it down or a couple other people that chased and then they're selling. We don't have an actual market determined yet. So in this case, it starts to rip through, and then you can start to see that it kind of consolidates around 2, and then 210 was the prior level. So it launches through that, and then I start to get interested. Where does it exhaust out from? And, you know, we had this nice fade off, a nice blow off at 240s, and that was a good opportunity in the room. We talked about that, and then it came right back down to this level where it actually had trapped from, which was the 210 range. And so we had mentioned the fact that, number one, that area was key around the 210 level. Assume that it's going to hold. So if you did participate as like a reactive trade, you always want to be on the front side of the cover, meaning you want to be proactively covering. You don't want to try to nail the entire move until you have those swipe tests, until it proves multiple times that it does want to fail to follow through. And it didn't. And in addition, it also absorbed every single time it attempted to break under VWAP. It went under, came back, went under, came back, went under, came back. And if it does that, then the more people that are anticipating it to fade at some point, they're all going to start to come to this realization at the same time, that was a mistake. And then they swipe it, and we get that high a day clear out. So with the high a day clear out, anytime that it looks like it's gearing back towards 240s, I want to be hands off. At that point, the more it trades over 240s, the better. Because that's more people that are covering over 240s. That's more people that are potentially buying the breakout over 240s. Those are all people that are going to now be on the wrong side of the trade, or were on the wrong side of the trade, but are no longer, right? Meaning the covers came in. So all those bids that are competing on the way up, that's continually kind of grinding it higher and higher, those are no longer going to be there. So flushes back under, and you can see that there's a nice exhaustion move over here, confirmation that 240 failed to follow through. We finally break under that VWAP level, and again, you get a nice little failed follow through right over here, double top, and then it unwinds into the close. So that was fantastic, great opportunity. I had faded that one into the, not necessarily the close, into the afternoon, but I had covered, and the reason why I had covered it was pretty much a cover right around I think it was 208, 207. And the reason for that was, number one, looking left. Number two, I was leaving. And number three, I just didn't want it to rally back. And yeah, it did puke out into the close, and it was pretty nice. But again, you know, I had moved on. Either way, you can see how creating and adding those levels on the way up will help you on the way down. It also serves as a good reminder not to screw around with it, because look, if you're trading above those levels, then that's when the outlier moves happen. You want to be on the same side as sellers. You want to be on the same side as the trend. And just being a little bit more patient, and yeah, you might have a worse average, but it's better than having a better average and then having all that outlier risk. And you guys know how that goes. And you know, it's not fun sometimes if you're trying to find the top and it continues to go. It's not a good place to be. It's not a high probability type of setup, and I think you'll start to realize that once you wait for the tables to turn, the tide to turn, it's going to be a lot less of a headache on the daily basis. So that was that. And then the same kind of thought process with this AXLA, where you want to basically see, this high day clear out, and then obviously you've got some support here at the 230 level. So you can see all the congestion over here, and then it comes back through, clears out. And for me to like this trade, come Monday, I want to see 230s exhaust out. Otherwise, we're still in trend. Right, so the sooner you can identify the channel, the better opportunity that you have to make good trades. And the same deal with this BIOC. This was a fantastic trade. Again, thinking big picture and kind of looking, take a step back instead of trying to figure it out right off the open. Where is the general area that it's hanging around? Where is the general area that it is, sort of working out traders, and what seems to be a key. And I think, you can pretty much just draw a couple lines here, zoom out a little bit, but you can see that, this basically 150 to 175 area was pretty much a key area. So again, for me to get interested and participate, I want to be seeing 175 plus exhaust. Then it comes under that. Then we have a nice little confirmation over here after 10 a.m. and then steady fail throughout the day. Pretty easy unwind, not too much of a headache, but it just held on, exceptionally and oddly well. So for me, I went ahead and sized out and covered under 130s there. I think it was 127 to 130, 131, maybe the last cover. And, as you saw, it squeezed out into the close. So to me, this could be one of two things. This could be one of those where they forced everybody to cover into the close, and then we gap down on Monday, which is likely. Or ideally, we have some sort of gap up, blows out again, over 150s, and we have a good opportunity. So we'll see what happens. But again, the sooner you can identify the channel that it's in, the more most people know those levels, and then they set themselves up to basically be emotionally attached at that exact level. Meaning if you see that 175 level and you size based off of that, and it wants to just check in and go 175, 180, and you're stopping out, that's on you. That's going to be very emotional. It's going to be a key area that may need to test and reject and kind of see what it's about multiple times. So if you set yourself up to stop out at that exact area, you're going to get chopped. So it's better just to kind of either avoid the trade for a bit, let more people get on the wrong side, or just wait for it to break and confirm and then kind of join that trend. But that's what I see a lot of people doing, because they always say, oh, the MMs see my stop order, and the MM's this and the MM's that. No, it's just because you're stopping out at the obvious area. You're taking the obvious trade, and they know that everybody's like a little bit timid right at this level. And if they can do just enough to again, turn doubters into believers, or make you think like, oh crap, maybe I shouldn't have added there. Now I got to cover. They know that. That's why. It's not because MMs see your stop orders. It's not because MM's this and MM's that. It's because you're doing the obvious trade. So think about that when you get into a position, making sure that you position accordingly, and your stops and your goals are not the same as everybody else. All right. So let's get into scan for the week ahead. And so on main watch is AXLA. Unfortunately, it came in after hours. Hopefully it stays up. Really nice runner. This was a long idea, and I picked NVOS. NVOS was still good. It went from 12 to 20 cents, then 20 cents to 35 cents, and it worked well. I still have about a quarter of it left, but AXLA was the other idea with that one if it's set up the same way. And I did not get long, unfortunately. So obviously 60 cents a share upside, or 70 cents, I guess, actually, would have been nicer than the 15 cents or so on NVOS, but all good, all good. AXLA, hopefully higher the better. They do have the shareholder meeting on Monday. So they buried in there that they want to also do a reverse split, and they're also going to reverse just the outstanding shares but not the authorized shares, which is going to allow them to dilute and dilute and dilute and dilute for ages to come. So it's going to be interesting to see how this one unravels. But again, think back to TTOO, right? AXLA is not just a one and done type of trade. It has a real market. It's not just a one-day wonder. It's been building and building and building. There's hundreds of millions of shares that have been trading. There's been, you know, big breakouts. There's been big breakdowns. So it's not going to, you're not going to miss it. So if you see it breaking down and you chase it on a 5, 6, 7 cent candle down, like that's, you're adding risk to, you know, whatever trade you're taking. Just be patient, wait for your spots, and that's going to be the best way to trade this one. I would love to see it continue to go higher. I'd love to see it push towards 1. I'd love to see that this was all just one big trap. It's been a while since we've had a stock go from 10 cents to $1 and actually potentially hold and turn into something great. So I would love to see that. I'm not saying that this is the right one to do it, but it's been a while. You know, think back to like MRIN back in the day when it went from real cheap to like $2, $3, or Mullen, you know, where people get comfortable shorting 50, 100, 200,000 shares, then all of a sudden they're not, you know, ready or expecting, you know, a move to jump on air 20, 30, 50 cents, and then you start to get those outlier moves. So again, I'm prepared. I'd love to have that. But again, it's not something that I think is on the table yet, unless we start to kind of form a base at 1. But just kind of looking back again at the channel, in the trade I did not take, I was off desk, but you know, what makes a good trade? You can see this channel, you see the blowout, another blowout, and then it peaks out at that $1 level, and then we break that 93 base and it starts to fade off. And then throughout the day, we had been talking about this 68 level. You can see all the dips, and it immediately came back up each time. And then you can see, you know, same deal over here, this dip and rip in the 74s, and it did the same thing again in the 80, 82 range, which was basically right over here. So seeing that is the same process that we went over with AI and CVNA and all these different names. It's so easy to want to get involved. It's so easy to think that you're right because it's up too much and it should pull back and yada yada yada. But this is going to be the stuff that keeps you out of the headache type trade. So, you know, I tried it in this area in like the 84, 85 range, and then I covered at 85, 86, 87, and then left for the day. But then it ramped up to $1, and it would have been a fantastic opportunity, but you know, again, I wasn't there. Just a simple solution to draw those lines to remind you that you're not on the right side of the trade until it's under that level. So that's the first one that I'm going to be watching. I'd love to see some sort of morning shove. I'd love to see it open up 85, rush to 90s, and honestly, like a 90 to $1 blow off would be amazing. But we'll see what happens. Again, understand that this is sort of a catalyst trade. They've got a lot of votes, shareholder proxy type stuff on Monday. All right, next up we've got CBAY. CBAY, I'd love to get a good trade off again. This was a fantastic one that basically, you know, nice failed follow through momentum, and the line that we drew in the room was right over here at this basically 1680 line, and you can see once it broke that, which lined up with VWAP, it ended up fading off nicely. So the goal was basically a $2 move, and we got almost exactly that. I think it was either $1.97 or $2 and change, but goal was trend join for a $2 move, and then potential fade back to flat. So we got a $2 move up and then a $1 move down. Really nice opportunity, and hopefully some took advantage of that. I would be looking for the same thing again. If I was looking for a spot to kind of fade it, ideally we get a push towards the 1650. The reason for that is just, you know, this is sort of like where it had a little bit of an issue before it faded off the rest of the day. So I'd love for it to recheck in with that and then start to fade off. FNGR daily chart, pretty nice. You probably should see, you know, what I'm looking for here, and this would be similar to a high day clear out, right? Only in this case is a daily chart clear out. I'd love to see it kind of trigger some shorts to cover, potentially over prior highs, and then looking for some sort of fade back from there. Looking back in hindsight, you know, looking left, you can see how this kind of stuff will help you. And you know, so we came back in over here and checked in with this support at 4. Now it's breaking out through here. Now we're retesting this prior level of consolidation, and you can see the wicks. Each day the wicks get absorbed. That's the stuff that creates longevity in moves, as we always talk about. So keep that in mind. And let's see, we got AMC, of course. We got AMC always. It's always a daily driver. Really nice opportunity. At some point, I still am of the mindset that they're going to say the ATM is complete. We're going to get a pop. Adam Aron's going to say like, oh, you know, congratulations, we raised X dollars, blah, blah, blah. It's not without you shareholder support they would be able to do this, blah, blah, blah. Stock's down like 99.99%. So, you know, as much as everybody is still bullish on AMC, I mean, the reality is no shareholder of AMC has any money left. And the only ones that are profitable on the AMC trade are people that buy, you know, on Monday and it's up, you know, whatever it's up, if it's up. And otherwise they're down. So be careful listening and falling for the crap that you see online, because literally every single person is down 99.99% on AMC. And that's the facts, regardless of mother of all short squeezes is coming and blah, blah, blah. None of that matters. No one has any money left. So next up is failed follow through. We went over BIOC, so hopefully I would love higher the better and some sort of exhaustion move for failed follow through. Verb, I'd love to see some sort of push 190s too and then fade back off. And then NIO is the only other one that I was watching as a potential. It just feels like this chart is about to break kind of down on the daily, so I'd like to see if we get that. Again, I'm not crazy bearish. I'm just looking for that potential trend join if it does end up unwinding. Otherwise, if not, then, you know, obviously you know how fast it can turn. Just like XPEV, sometimes we see that and it just does the same chart just like NEO, and then all of a sudden we're breaking back out again. So again, it's more of a daily driver, a name that I'm interested in, and it always has good volume, and that's probably about it. CGC, so far so good. Anybody that paid any attention to last Sunday video or any of the scans this week or last week, you know, you guys know that I was bullish on the marijuana sector. So that was, you know, my picks were MSOS as long, CGC as a long, and Tilray as a long. So Tilray I sold all out of. Cron, C-R-O-N, I put on a small batch on Friday. ACB, I don't have any yet, but I'm interested. And then CGC, obviously, we had a nice breakout move on that. And unfortunately, I only have minimal left, but I am hopeful that it pulls back. We did have those wicks that we talk about, and they came back. Wicks came back, which creates longevity in the move, just like we talked about. So you can see how that, you know, those flushes followed by the absorption creates a longer term move. So again, that was Cron as well as part of that batch. NVOS, I'm still there. Again, I've got about a quarter. It's worked out fantastic. Again, it was a little bit hairy there for a minute. I traded this move, and then I had got in there on a starting position. It faded off. So then I got back to flat here. I added, and then I sold it all those days that you saw my exits, and then I'm currently just holding a portion of that. So we'll see what happens with that. And then the last two is GCT. I'm just monitoring. This one's got a history of some craziness, especially this day right over here. Very interesting. And I feel, yeah, it used to be one of those, one of the IPOs that just went crazy and then completely came apart. And it's been a pretty amazing rally so far. It feels like this entire move could be, you know, sort of a short squeeze of sorts, potentially starting with this day over here, and they've just been kind of compounding that failure to deliver since. But we'll see. So again, I think that we're due for maybe a $2, $3, $4, $5 pullback one day. But the problem is does that mean that it's going to pull back off of this level or 20, 22, 24, you know, things like that. So I never forget names, and I never forget the history. We already knew that this happened back in the day, liquidation type of trade. So I always, kind of keep that in mind, just like, stuff like HOLO. I just never, the key is just never to forget. And so that was one thing that I won't forget on that GCT. And then last but not least, Derm. Nice little breakout setup. No position at the moment, but just watching. If it starts to firm up and look like it's going to break out, I'd love to participate. So again, that's it. Hopefully you guys took a few things away from this. If not, then hey, hopefully you watch next week. But again, Canada, bring your A game. We got a special shirt just for this video. But again, the waiting list and to get the early access, just put your email in, and we'll have everything sent to you so that you can open up an account, and hopefully you guys have a good rest of the weekend. And as far as shirts, I will pick some more next week. So again, the one thing I asked you guys, interviews. Who would you like to see interviewed? I would love to do some more interviews. We have a bunch more coming, but we want to keep that pace. We want to keep pushing out, as many as we can. We just put one out with Brian Shannon on Friday, so check that out. And otherwise, we'll see you in the room on Monday, and have a good rest of your weekend.